In the darkest corridors of corporate reinvention, few stories challenge conventional logic like Strategy's transformation from a business intelligence firm into a Bitcoin juggernaut. Imagine a tech company that, in the year 2020, looked at its idle cash and declared, "We won't just sit on this, let's bet it all on Bitcoin." That audacious pivot, led by Michael Saylor, rewrote what it means to be a public company. Tonight, we peel back every layer of that gamble. How Strategy began, the crises endured, the key personalities, the bold decisions, and whether this extreme bet may become the blueprint for corporate treasuries. If you want more deep dives into stories of radical reinvention, hit that like button, leave a comment, Strategy if you reached here, and subscribe to join the journey. Founded in 1989 by Michael J. Saylor, Sanju Bansal, and Thomas Spar, Strategy, then known as MicroStrategy, began its life not as a crypto player but as a software venture with roots in business intelligence and data analysis. Saylor, fresh from MIT, teamed with Bansal, out of MIT's fraternity connections, to found a firm that could turn raw data into actionable insights. Early on, the company landed a substantial working capital boost via a consulting contract with DuPont, giving them the seed money and credibility to build a real software suite. Over the next years, MicroStrategy refined its platform for analyzing internal and external business data, enabling organizations to make smarter decisions from data mining, dashboards, and predictive models. The firm's early success was anchored in selling software licenses, delivering analytics tools, and building a reputation for technological precision. It went public in 1998 on NASDAQ under the ticker MSTR, riding the wave of the dot-com boom. But beneath the surface, the firm navigated murky waters, the dot-com crash, accounting scrutiny, and existential questions about differentiation in the crowded software market. That era would test the resilience of Saylor and his co-founders and set the stage for the dramatic pivot that lay decades ahead. The late 1990s brought MicroStrategy into the spotlight, but also into the storm. By 2000, the company's valuation soared during the tech bubble, with shares trading above $300, giving it a market cap close to $30 billion. For a brief moment, MicroStrategy was considered one of the most valuable software firms in America, fueled by the promise of business intelligence solutions in a digital age. But that meteoric rise came crashing down in March 2000, when the U.S. Securities and Exchange Commission questioned the company's accounting practices. MicroStrategy was forced to restate its financial results for the previous 2 years, correcting how it recognized revenue from software contracts. The stock price collapsed overnight, plunging from over $300 to under $50 in just days, erasing billions in shareholder value. Michael Saylor, once a symbol of entrepreneurial genius, suddenly faced lawsuits, regulatory heat, and the brutal reality of public markets. It was a crucible moment. Many expected the company to vanish, another casualty of the dot-com crash. Instead, Saylor remained at the helm, accepting personal responsibility, paying fines, and vowing to rebuild both credibility and the business itself. This period is often described as MicroStrategy's darkest hour, a near-death corporate experience that forged the resilience it would need for reinvention decades later. Emerging from the ashes of the dot-com collapse, MicroStrategy doubled down on its original mission: business intelligence software. Throughout the 2000s, the company worked to stabilize revenue, attract new clients, and rebuild trust on Wall Street. It leaned into providing enterprises with tools to process increasingly complex data sets, from customer behavior to financial forecasting. While rivals like Oracle, SAP, and IBM dominated large segments of enterprise software, MicroStrategy carved out a reputation for robust, highly technical analytics solutions, often appealing to companies that demanded precision and scalability. Under Saylor's leadership, the firm slowly regained stability, but it never reclaimed the explosive market capitalization of 1999. Instead, MicroStrategy matured into a steady, mid-tier enterprise software player. Yet the fire that drove Saylor was not extinguished. He began to look beyond BI software, increasingly skeptical of holding corporate cash in U.S. dollars amid growing concerns about inflation and monetary policy. These seeds of doubt, planted quietly during the 2000s, would grow into the radical strategic shift that would later define both Saylor's career and the company's identity in the 2020s. The 2010s marked a new chapter for MicroStrategy, one that saw both stability and strategic frustration. The company had a loyal base of enterprise clients and a solid suite of analytics products, but it was increasingly overshadowed by newer players in the data visualization and cloud markets, Tableau, Qlik, and eventually, the rise of Power BI from Microsoft. These rivals democratized business intelligence, making it more accessible, visually appealing, and integrated with cloud ecosystems. While MicroStrategy maintained a reputation for power and scale, it was often criticized for complexity and a slower pace of adaptation. Michael Saylor, still the public face and driving force behind the company, spent this era rethinking long-term strategy. He began publishing books and speaking about the role of information, technology, and long-term thinking in business. But by the end of the decade, one problem became impossible to ignore. MicroStrategy's stock had stagnated for nearly 20 years, oscillating in a narrow band, far from the glory days of the dot-com boom. For a visionary like Saylor, this stagnation was unacceptable. It demanded a radical solution. That solution arrived in the form of an unlikely asset, Bitcoin. In 2020, against the backdrop of a global pandemic, unprecedented monetary stimulus, and growing inflationary fears, Michael Saylor announced that MicroStrategy would adopt Bitcoin as its primary treasury reserve asset. It was a corporate first. No other publicly traded company had committed to holding Bitcoin as its balance sheet backbone. In August 2020, MicroStrategy revealed its initial $250 million purchase of Bitcoin, acquiring 21,454 coins at an average price of roughly $11,600 per Bitcoin. This decision stunned Wall Street and the tech world. Some hailed Saylor as a visionary, finally finding a way to differentiate his company. Others condemned him as reckless, turning an enterprise software firm into what critics called a Bitcoin ETF in disguise. Yet the boldness of the move captured global headlines and repositioned MicroStrategy from a mid-tier software player to the poster child of corporate Bitcoin adoption. The gamble had begun, and the world was watching. As the world tried to process MicroStrategy's initial Bitcoin bet, Michael Saylor doubled down. Within months, the company announced additional purchases, using both corporate cash and, eventually, debt financing to acquire more Bitcoin. By December 2020, MicroStrategy had invested over $1 billion in Bitcoin, holding more than 70,000 coins. The move was no longer a side experiment. It was the centerpiece of the company's new identity. Saylor framed Bitcoin not as a speculative gamble, but as a rational hedge against inflation and a superior treasury asset compared to cash. In interviews, he repeatedly emphasized that the U.S. dollar was melting like an ice cube, and that Bitcoin offered digital scarcity unmatched by any other asset. The rhetoric polarized analysts and investors. Some saw genius in Saylor's clarity, while others viewed it as corporate recklessness bordering on obsession. Yet each purchase announcement generated headlines worldwide, giving MicroStrategy more attention than it had enjoyed in decades. For better or worse, the company was now inseparable from Bitcoin. To finance this strategy, Saylor turned to an unconventional playbook, issuing convertible notes and corporate debt explicitly to buy more Bitcoin. In February 2021, MicroStrategy raised $1.5 billion through a debt offering, using the proceeds entirely for Bitcoin purchases. This was unprecedented in corporate finance, a software firm leveraging debt markets not for R&D, acquisitions, or expansion, but to load its balance sheet with a volatile digital asset. By the end of 2021, MicroStrategy controlled more than 120,000 Bitcoin, becoming the largest corporate holder of the cryptocurrency in the world. Critics compared the company to a highly leveraged hedge fund. Supporters celebrated it as a bold pioneer rewriting financial history. The firm's share price reflected this tension, soaring when Bitcoin rallied, crashing when Bitcoin fell. MicroStrategy's core business in analytics still existed, but it became overshadowed by headlines of its Bitcoin treasury. Wall Street, the crypto industry, and even regulators began to ask, was this a brilliant reinvention or the riskiest corporate gamble of the century? The years 2021 and 2022 tested the resilience of both MicroStrategy and its audacious Bitcoin strategy. As Bitcoin surged to an all-time high of nearly $69,000 in November 2021, MicroStrategy's holdings were worth tens of billions of dollars on paper, and Michael Saylor was hailed in some circles as a genius who had anticipated the institutional wave into crypto. The company's stock price skyrocketed in parallel, mirroring Bitcoin's meteoric rise. But when the cycle turned, the fall was just as dramatic. By mid-2022, Bitcoin had crashed below $20,000, erasing more than two-thirds of its value. This collapse sparked a storm of criticism, with headlines questioning whether MicroStrategy was now dangerously overexposed. The company faced paper losses in the billions, and skeptics suggested that its aggressive debt-fueled purchases could trigger a corporate implosion. For investors and observers alike, the question loomed. Could MicroStrategy survive the full brutality of Bitcoin's volatility? Or was this the beginning of the end? Through the chaos, Michael Saylor remained steadfast. Rather than retreat, he amplified his conviction, appearing on podcasts, conferences, and media outlets to frame Bitcoin's volatility as noise on the path to long-term adoption. He argued that just as Amazon had endured brutal collapses during the dot-com crash, only to become one of the world's most valuable companies, Bitcoin too would weather cycles and emerge stronger. Internally, MicroStrategy reinforced its commitment, continuing to buy Bitcoin on dips when possible and maintaining that its long-term thesis remained intact, that Bitcoin would become a trillion-dollar, globally recognized store of value. In August 2022, Saylor even shifted roles, stepping down as CEO to focus exclusively on Bitcoin strategy as executive chairman, while Phong Le, the company's longtime president and CFO, assumed the CEO position. This restructuring signaled a new phase. MicroStrategy's day-to-day software operations would continue, but Saylor's full energy would be devoted to navigating the volatile, uncharted waters of Bitcoin as a corporate asset. The strategy, however, was not without its risks. As Bitcoin's price fluctuated violently, questions arose about MicroStrategy's debt obligations and its ability to withstand margin calls on loans tied to its Bitcoin holdings. Critics argued that the company had effectively tethered its survival to the fate of a highly volatile asset, exposing shareholders to unnecessary risk. Yet Saylor and his team maintained that their approach was sustainable, pointing out that most of the debt was structured with long maturities and low interest rates, providing a buffer against short-term volatility. They stressed that MicroStrategy had ample collateral and liquidity to avoid forced liquidations and that the company was positioned for resilience. To many observers, the boldness bordered on recklessness. To others, it was visionary leadership in action. What became clear was that MicroStrategy was no longer judged by the metrics of a typical software company. It had become, in the eyes of the world, the corporate face of Bitcoin itself. As the world of finance grappled with the implications of Bitcoin adoption, Michael Saylor emerged as one of its loudest and most influential evangelists. His public persona shifted from tech entrepreneur to global spokesman for digital assets, often appearing alongside high-profile figures in the crypto industry. Through interviews on mainstream outlets like CNBC and Bloomberg, as well as appearances on crypto-focused podcasts and events, Saylor positioned himself as the intellectual bridge between Wall Street and the decentralized future. His message was consistent and relentless. Bitcoin was not merely an investment, but a revolutionary monetary network destined to outlast fiat currencies. This narrative resonated with both institutional investors seeking diversification and retail investors hungry for validation of their faith in crypto. By reframing MicroStrategy's pivot as not just corporate strategy but financial revolution, Saylor amplified the company's visibility and influence far beyond its software origins. The impact of Saylor's advocacy went beyond headlines. His decision inspired other corporations and institutions to consider Bitcoin for their balance sheets. In early 2021, Tesla briefly adopted Bitcoin as a treasury reserve and even accepted it as payment, a move many credited to the path carved by MicroStrategy. Fintech firms like Square, now Block, also increased their Bitcoin holdings, signaling a shift in how corporate treasuries thought about digital assets. Even traditional financial giants began exploring crypto services, acknowledging that the landscape was changing. MicroStrategy had effectively normalized the idea that Bitcoin could be a corporate treasury tool, setting a precedent that regulators, investors, and executives worldwide could no longer ignore. Yet with this influence came scrutiny. Every price fluctuation, every new debt issuance, and every quarterly earnings call became a referendum not only on MicroStrategy's health, but on the credibility of Bitcoin itself as a long-term store of value. The embrace of Bitcoin by a public company inevitably attracted the attention of regulators, analysts, and traditional financial institutions. For many on Wall Street, MicroStrategy became a case study, both a warning and an inspiration. Equity analysts struggled with how to value the company. Was it still an enterprise software vendor, or had it morphed into a de facto Bitcoin holding vehicle? Some brokerage houses began issuing reports explicitly tying MicroStrategy's price targets to Bitcoin's projected performance rather than its software revenues. Regulators, meanwhile, monitored closely. The Securities and Exchange Commission, SEC, questioned certain disclosures, pressing the company to be transparent about the risks inherent in its Bitcoin-centric treasury strategy. This scrutiny underscored a larger truth. By adopting Bitcoin so aggressively, MicroStrategy had placed itself not only at the center of market speculation, but also at the forefront of debates about the future of corporate finance and regulation in the age of digital assets. MicroStrategy's leadership responded to these pressures with calculated defiance. Saylor, unflinching in his conviction, framed the regulatory spotlight as inevitable growing pains for a transformative technology. He argued that scrutiny was not a deterrent, but rather validation that Bitcoin had become too significant to ignore. Fong Lo balanced this rhetoric with pragmatic reassurance, highlighting the stability of the company's software revenue and reminding investors that MicroStrategy was still building and selling analytics solutions to global clients. This dual narrative, Saylor the visionary revolutionary, Lee the cautious operator, helped the company navigate turbulent waters. On one hand, MicroStrategy embraced its role as the corporate symbol of Bitcoin. On the other, it emphasized operational continuity, making the case that it was not abandoning its roots but evolving. Still, the underlying reality was clear. The company's identity and its valuation were now inextricably tied to the fate of Bitcoin, for better or for worse. The crypto winter of 2022 and early 2023 was a brutal test of MicroStrategy's resolve. As Bitcoin prices collapsed amid high interest rates, global recession fears, and the implosion of major crypto firms like FTX, the company's balance sheet looked increasingly fragile. Headlines speculated that MicroStrategy could face margin calls on its Bitcoin-backed loans, and critics predicted that the strategy might end in bankruptcy. At one point, with Bitcoin trading under $17,000, the company's paper losses exceeded billions of dollars. Analysts issued warnings, short sellers circled, and the skepticism reached a crescendo. For a typical company, Such financial pressure might have forced liquidation of assets or a retreat from its bold position. But MicroStrategy refused to blink. The leadership team insisted that they had structured debt terms carefully, with sufficient collateral to avoid forced sales. In public statements, Saylor dismissed fears as noise and reiterated his thesis. Bitcoin was not a quarter-to-quarter play. It was a generational bet. Surviving this storm was as much about psychology as finance. For shareholders, the fear was palpable. Could MicroStrategy endure if Bitcoin entered a prolonged depression? Yet, paradoxically, the company's refusal to sell and its unwavering message reinforced loyalty among its most committed supporters. To Bitcoin believers, MicroStrategy became a symbol of resilience, a company willing to endure pain in service of conviction. The stock price remained highly volatile, but the narrative began to shift from MicroStrategy might collapse to MicroStrategy is unshakable. The company's ability to weather this existential crisis without liquidating its Bitcoin holdings enhanced Saylor's credibility as a long-term thinker, even among skeptics who disagreed with his methods. By mid-2023, as Bitcoin began to recover and institutional adoption showed new signs of life, MicroStrategy's gamble once again looked less like reckless obsession and more like disciplined endurance, a bet that, while bruising, was far from broken. By mid-2023, a subtle but powerful shift began to occur. Bitcoin prices started to climb again, fueled by renewed institutional interest, speculation about spot Bitcoin ETF approvals in the United States, and a general rebound in risk assets. For MicroStrategy, this recovery was a lifeline. Its paper losses shrank dramatically, and the narrative of imminent collapse began to fade. Michael Saylor seized the moment to amplify his voice once again, presenting MicroStrategy not as a company that had merely survived the storm, but as one that had demonstrated iron conviction when others faltered. At conferences and media appearances, he likened the company's journey to sailing through a hurricane, scarred but intact, and now sailing into clearer waters. This resurgence not only restored confidence among investors, but also re-established Saylor as one of the most prominent figures in the global Bitcoin conversation. For critics, it was frustrating proof that resilience, even when bordering on stubbornness, could pay off in the long run. The rebound also reignited MicroStrategy's role as a strategic reference point for corporations considering digital assets. Analysts who had once dismissed the company as a reckless outlier now re-examined its approach in light of regulatory progress and institutional adoption. With Bitcoin's recovery, MicroStrategy's stock price once again moved in near lockstep with the cryptocurrency, reinforcing the company's hybrid identity as both a software vendor and a corporate Bitcoin ETF. Internally, leadership emphasized that the analytics business continued to generate steady revenue, providing a backbone of stability even as the balance sheet rode crypto's waves. This dual engine, software cash flow and Bitcoin holdings, was reframed not as a contradiction but as a unique strategic position. To its believers, MicroStrategy embodied the future, a company that combined traditional enterprise software with digital monetary assets in a way no competitor dared to attempt. Capitalizing on Bitcoin's rebound in 2023, Michael Saylor intensified his role as the philosopher king of corporate Bitcoin adoption. His message became sharper. While other companies hesitated, MicroStrategy had already crossed the Rubicon, transforming itself into a model of financial boldness. He spoke at institutional investor conferences, drawing parallels between the adoption of Bitcoin and the adoption of the Internet in the 1990s, an inevitable revolution resisted only by those unwilling to see change. His argument was simple but powerful. Corporations that delayed adoption would one day look back with regret, just as businesses that ignored the Internet had disappeared from history. This narrative reframed MicroStrategy's earlier suffering not as miscalculation, but as proof of endurance, a badge of honor in a market where conviction was rare. As Saylor told audiences, volatility was the price of progress. and MicroStrategy was paying it willingly to secure a front-row seat to the future of money. At the same time, institutional developments gave Saylor's words added credibility. The growing push for Bitcoin exchange-traded funds, ETFs, in the U.S., with applications from financial titans like BlackRock and Fidelity, suggested that mainstream adoption was approaching a tipping point. MicroStrategy positioned itself as both a beneficiary and a symbol of this movement. The company's holdings, publicly reported and meticulously tracked, became a barometer of corporate-scale conviction in Bitcoin. Every purchase it announced was dissected by media outlets and retail traders alike, amplifying its influence. For MicroStrategy, the convergence of its corporate strategy with Wall Street's growing acceptance of crypto meant validation. It was no longer just a mid-sized software firm with an eccentric CEO. It was the embodiment of Bitcoin's march into the corporate and institutional mainstream. The transformation was undeniable, and the gamble, though not yet proven, had redefined what was possible for public companies in the digital age. Despite the growing legitimacy of Bitcoin and the resurgence of MicroStrategy's narrative, critics remained vocal. Traditional investors and financial analysts often accused the company of abandoning its fiduciary duty to shareholders by tying its fate so tightly to a volatile, speculative asset. They argued that MicroStrategy had effectively ceased to operate as a traditional software company and had become, in practice, a proxy Bitcoin ETF, except without the diversification or regulatory safeguards. Some even suggested that the company's stock was riskier than Bitcoin itself, since it carried both crypto volatility and the operational risks of running a software business. Skeptical fund managers used these arguments to justify excluding MicroStrategy from portfolios, labeling it as too extreme for mainstream inclusion. For them, Michael Saylor's relentless conviction bordered on fanaticism, and while they acknowledged his charisma, they questioned whether such a singular strategy could sustain a public company in the long run. Yet this very criticism played into Saylor's hands. He leaned into the contrarian role, framing MicroStrategy as the courageous outlier, willing to do what others feared. In interviews, he often invoked historical parallels, companies that clung to old models in times of disruption, be it Kodak with film, Blockbuster with rentals, or Nokia with phones, were ultimately swept away. In his framing, the critics were simply repeating history, dismissing the new paradigm until it became too big to ignore. This rhetorical judo not only kept the spotlight on MicroStrategy, but also strengthened its appeal among Bitcoin advocates, who saw the company as their champion in the world of institutional finance. For believers, skepticism wasn't a warning sign. It was proof that the revolution was still in its early days. By turning criticism into fuel, Saylor ensured that MicroStrategy remained not just a participant in the Bitcoin story, but one of its most dramatic protagonists. Inside MicroStrategy, the radical pivot to Bitcoin reshaped the company's culture and internal dynamics. For some employees, the shift was exhilarating. They now worked not only for a software company, but also for a pioneer at the intersection of corporate finance and digital assets. Staff began to describe their mission as something larger than analytics, positioning themselves as builders of a new financial frontier. For others, however, the transition was unsettling. Talented engineers and business consultants who had joined to advance careers in enterprise software sometimes felt overshadowed by the relentless Bitcoin narrative. There were reports of employees struggling to reconcile the day-to-day focus on BI solutions with the external image of MicroStrategy as the Bitcoin company. Leadership worked to reassure staff that software innovation still mattered, emphasizing product roadmaps and client commitments. Yet, even within its walls, MicroStrategy was no longer a conventional workplace. It had become an experiment in corporate identity, balancing tradition with revolution. Executive leadership played a critical role in managing this internal tension. Fong Lei's pragmatic style was crucial, serving as a stabilizing counterweight to Saylor's high-profile evangelism. Under his guidance, teams were encouraged to continue delivering for clients, ensuring that software revenues remained a consistent anchor. At the same time, Saylor cultivated a sense of purpose that transcended ordinary corporate goals, positioning MicroStrategy's Bitcoin strategy as a world-changing mission. For employees who embraced this vision, the company became more than a job. It became a cause. Recruiting materials and internal communications began to highlight not only technical excellence, but also conviction in Bitcoin's future. While not every employee shared this fervor, those who stayed often did so out of belief in both Saylor's leadership and the transformational bet the company had made. The result was a corporate culture unlike any other. Half enterprise software vendor, half Bitcoin crusader, united under one brand that refused to compromise. The media played a central role in shaping the mythos of MicroStrategy's transformation. Headlines alternated between admiration and alarm. Some outlets praised Michael Saylor as the boldest CEO of his generation, a visionary willing to risk everything on conviction. Others cast him as reckless, leading a once stable software company into dangerous territory. Financial magazines published cover stories dissecting his gamble, while mainstream outlets often portrayed him as the face of Bitcoin's corporate legitimacy, or its madness, depending on the news cycle. Documentaries and podcasts explored his journey, juxtaposing footage of the dot-com collapse with clips of his fiery pro-Bitcoin speeches. This duality, hero or fool, was part of the allure. By creating a narrative filled with drama, the media ensured that MicroStrategy remained in the spotlight, regardless of Bitcoin's price. For Saylor, who understood the value of attention in the digital age, this coverage was not a burden but an asset. He knew that in the marketplace of ideas, visibility was power. This intense spotlight also amplified the stakes. Every Bitcoin purchase by MicroStrategy was treated like breaking news, sending ripples through both crypto markets and Wall Street. Traders speculated on the timing of Saylor's moves. Retail investors rallied around his pronouncements on social media, and critics dissected each decision with forensic detail. The company's quarterly earnings calls became events watched far beyond its usual shareholder base, as analysts, journalists, and crypto enthusiasts tuned in to hear Saylor's latest defense of Bitcoin. This attention, while sometimes harsh, kept MicroStrategy at the center of a global conversation, ensuring its relevance in a crowded financial landscape. By leaning into this role rather than retreating from it, Saylor and his company turned scrutiny into a megaphone, amplifying their message to audiences that would otherwise have ignored a mid-tier business intelligence vendor. The paradox was striking. The more controversial the strategy, the more powerful the platform it created. Institutional investors approached MicroStrategy with a mix of fascination and caution. For hedge funds and asset managers, the company presented a unique opportunity: exposure to Bitcoin through a regulated, publicly traded equity. This allowed institutions to sidestep the complexities of custody and compliance that often accompanied direct Bitcoin ownership. In effect, MicroStrategy had become a synthetic Bitcoin ETF long before regulators approved the real thing. Some funds embraced this angle, adding MSTR stock to portfolios as a high-risk, high-reward play. Others kept their distance, concerned that the stock's extreme volatility and dependence on one volatile asset made it incompatible with traditional mandates. Analysts struggled with classification. Should MSTR be valued on software fundamentals or on the mark-to-market value of its Bitcoin holdings? This ambiguity made MicroStrategy a case study in how disruptive strategies could confound established models of corporate finance. The dual identity of MicroStrategy, as both a business intelligence firm and a Bitcoin holding company, created unusual dynamics in its valuation and investor base. Traditional tech investors who had followed the company for decades often felt alienated, unsure how to analyze a balance sheet dominated by cryptocurrency. Meanwhile, a new cohort of crypto enthusiast investors flocked to the stock, not for its software products, but for its Bitcoin exposure. This blending of audiences reflected a larger transformation. MicroStrategy was no longer competing only in the market for analytics tools, but in the arena of financial imagination. To some, this duality was a strength, giving the company two distinct engines of value. To others, it was a weakness, leaving the firm vulnerable to the risks of both industries simultaneously. Either way, MicroStrategy had redefined itself as something more than a conventional company. It had become a hybrid entity, existing at the intersection of technology and monetary revolution. By the time Bitcoin adoption entered mainstream financial debates in 2023, Michael Saylor's personal brand had become nearly indistinguishable from MicroStrategy's corporate identity. He was no longer introduced primarily as the co-founder of a software company, but rather as the global champion of corporate Bitcoin adoption. His Twitter feed, followed by millions, became a non-stop stream of pro-Bitcoin content. Quotes, memes, charts, and philosophical musings about digital scarcity and monetary history. For his supporters, Saylor embodied conviction and intellectual clarity. For his detractors, he symbolized the dangers of charismatic leadership unchecked by corporate governance. This blending of man and company created both opportunity and risk. MicroStrategy benefited from the free publicity and the magnetism of Saylor's persona, but it also became highly dependent on the credibility of one individual. In essence, the company's destiny was now bound not only to Bitcoin's price chart, but also to the reputation of its most visible leader. This intertwining of personal and corporate identity reflected Saylor's deliberate strategy. He presented himself as a thinker in the tradition of technological visionaries, part Steve Jobs, part Elon Musk, but with Bitcoin as his chosen cause. By framing Bitcoin as a civilizational breakthrough rather than a speculative trade, Saylor elevated MicroStrategy's story above the level of quarterly earnings. Conferences invited him as a keynote speaker. Media outlets sought his commentary whenever Bitcoin moved sharply, and even policymakers began to cite his perspective in discussions about digital assets. The effect was a feedback loop. The more Saylor spoke, the more MicroStrategy's reputation grew. The more the company attracted attention, the greater Saylor's platform became. While some corporate leaders fear being overshadowed by their own personas, Saylor embraced the fusion, turning himself into both the message and the messenger. In the process, MicroStrategy ceased to be just a company. It became a vessel for a worldview, carried forward by its most unrelenting advocate. Within the crypto community, MicroStrategy achieved an almost mythic status. To many Bitcoin advocates, the company was no longer just another NASDAQ-listed firm, but a powerful ally in legitimizing their cause. Forums, podcasts, and YouTube channels in the crypto space frequently hailed Michael Saylor as one of us, a corporate leader who had crossed the line from traditional finance into digital rebellion. The fact that a publicly traded company was willing to stake billions on Bitcoin gave believers a rallying point, proof that their vision of a decentralized financial future was not just idealistic, it was corporate reality. MicroStrategy's announcements became moments of celebration in online communities, with memes, hashtags, and viral campaigns amplifying each new Bitcoin purchase. This organic support network transformed the company's brand equity. MicroStrategy didn't have to buy loyalty in the crypto world. It earned it by aligning itself so completely with the movement's ethos of conviction, scarcity, and resistance to fiat inflation. This alignment came with tangible benefits. The crypto community, known for its passion and digital activism, often acted as an informal marketing arm for MicroStrategy. Saylor's interviews spread rapidly through Twitter, Reddit, and Telegram groups, extending the company's visibility far beyond traditional investor circles. Retail investors who already believed in Bitcoin began buying MicroStrategy stock as an indirect way to support the cause, fueling liquidity and attention in the markets. At conferences like Bitcoin Miami, Saylor was received less like a CEO and more like a rock star, greeted with standing ovations and treated as a thought leader shaping the movement's intellectual core. This cultural crossover, from corporate boardrooms to grassroots digital tribes, was unprecedented. It gave MicroStrategy a level of brand loyalty that few enterprise software firms could ever dream of. In essence, the company had successfully embedded itself in two worlds, the formal structure of Wall Street and the insurgent energy of Bitcoin maximalism. Even as MicroStrategy basked in the loyalty of the crypto community, the financial risks underpinning its bold strategy never disappeared. The company had accumulated billions of dollars in debt to finance its Bitcoin purchases, a structure that looked brilliant in bull markets but precarious when prices fell. Analysts warned that leverage could amplify downside risk, especially if Bitcoin faced a prolonged bear cycle. Concerns about potential margin calls, liquidity constraints, and the possibility of being forced to liquidate holdings hovered like storm clouds over the balance sheet. These weren't abstract worries. The volatility of 2021-2022 had already demonstrated how quickly MicroStrategy's paper wealth could evaporate. Institutional skeptics framed the company as walking a financial tightrope, arguing that one sharp downturn could undo years of strategy. For all its cultural momentum and visionary narrative, MicroStrategy remained vulnerable to the same brutal mathematics that governed every leveraged bet. Michael Saylor, however, continued to frame these risks as calculated and manageable. He pointed out that most of the company's debt had been issued with long-term maturities and at historically low interest rates, providing flexibility to endure short-term turbulence. He emphasized that MicroStrategy held more Bitcoin than any other corporation in the world, and that this sheer scale offered a unique competitive advantage. No rival could replicate the company's first-mover position without enormous cost. Saylor argued that volatility was temporary, but scarcity was permanent, and that over time, Bitcoin's price would inevitably rise to reflect its role as digital gold. His conviction transformed risk into part of the story, not something to hide, but something to embrace as proof of belief. To his supporters, this confidence was inspiring. To his critics, it was reckless bravado. Yet regardless of perspective, the result was the same. MicroStrategy remained at the center of global debates about risk, innovation, and the future of money. One of Michael Saylor's most consistent narratives was the comparison between Bitcoin and gold. For decades, gold had served as the traditional hedge against inflation and financial instability, the cornerstone of safe haven investing. But Saylor argued that Bitcoin was superior in nearly every dimension: more portable, more divisible, easier to verify, and impossible to debase through mining beyond its fixed 21 million supply. He often referred to Bitcoin as digital gold, suggesting that it was not merely an alternative asset, but the inevitable successor to centuries of monetary convention. By framing MicroStrategy's Bitcoin holdings as the corporate equivalent of a modern gold reserve, Saylor repositioned the company as a custodian of financial innovation rather than a reckless speculator. In his view, MicroStrategy wasn't gambling. It was executing a disciplined strategy to preserve and grow shareholder value in an era of fiat erosion. This framing resonated with those who feared inflation and distrusted central banks, further aligning the company with a powerful global narrative. The gold analogy also allowed MicroStrategy to tap into a broader historical and philosophical context. Saylor frequently invoked the failures of fiat currencies throughout history, citing examples of hyperinflation in Weimar Germany, Zimbabwe, and more recent crises in Venezuela and Argentina. By weaving these cautionary tales into his corporate strategy, he elevated the discussion from quarterly profits to civilizational stakes. MicroStrategy, in this light, was not simply holding Bitcoin. It was defending against the systemic risks of modern monetary policy. This storytelling gave the company a larger-than-life identity, part software firm, part hedge fund, part monetary think tank. To investors who shared this worldview, MicroStrategy became more than a stock symbol. It became a vehicle for participating in what they believed was the greatest financial transformation of the century. To critics, however, the rhetoric only reinforced concerns that the company's strategy had become ideological rather than pragmatic. Still, the narrative was powerful, and it ensured that MicroStrategy's story could not be ignored. As MicroStrategy's story unfolded, it became more than just a corporate case. It evolved into a living lesson for investors, executives, and even policymakers. For institutional investors, the company demonstrated both the allure and the peril of tying balance sheet strategy to a volatile asset. Some began to see Bitcoin not only as a speculative trade, but as a potential treasury tool, while others used MicroStrategy as a cautionary tale of concentration risk. For corporate executives, the case raised provocative questions. Should companies hold their cash in depreciating fiat, or dare to adopt alternative assets that could multiply in value? And for governments, watching a U.S.-listed company channel billions into a decentralized currency sparked conversations about regulation, taxation, and the systemic role of Bitcoin in the financial system. MicroStrategy was no longer just influencing shareholders. It was shaping global debate on money itself. For Michael Saylor, this broader impact was part of the plan. He often described MicroStrategy's actions as a signal to the market, a beacon showing that corporate treasuries could break free from tradition. His speeches and writings framed the company's pivot as a spark for a wider movement, where corporations, institutions, and even nations might follow suit. And indeed, in the years after MicroStrategy's first purchase, sovereign wealth funds and governments began exploring digital assets, while central banks accelerated research into central bank digital currencies, CBDCs. Whether one agreed with Saylor or not, the evidence was clear. MicroStrategy had forced the financial world to pay attention. The company's boldness had reshaped the boundaries of corporate responsibility, turning a once stagnant software firm into a lightning rod for innovation, risk, and debate on the future of money. By the early 2020s, MicroStrategy had become something unprecedented in corporate history. A company whose market relevance was tied less to the products it sold and more to the financial assets it held. Its software division, though still functional and serving thousands of enterprise clients, was now almost an afterthought in public discourse. What captivated the world was the Bitcoin bet, its scale, its symbolism, and its volatility. Analysts, journalists, and investors alike began to acknowledge that MicroStrategy had transcended its original industry, becoming the embodiment of a new corporate archetype. Part operating business, part treasury experiment, and part cultural phenomenon. This transformation was as much about narrative as numbers. Through relentless communication, Michael Saylor had crafted a story that resonated across borders, disciplines, and ideologies. Whether hailed as visionary or condemned as reckless, MicroStrategy could no longer be ignored. The endurance of that narrative depended not only on Bitcoin's long-term trajectory, but also on MicroStrategy's ability to remain disciplined through cycles. Each bull run validated Saylor's thesis, and each bear market tested it with brutal intensity. Yet the company's survival, even amid extreme downturns, proved that conviction could be a strategy in itself. For entrepreneurs, the lesson was clear. Boldness, when paired with resilience, could redefine a company's destiny. For investors, the message was more complex. Opportunity often comes intertwined with risk, and clarity of vision is both a weapon and a liability. MicroStrategy's story illustrated a fundamental truth about innovation and disruption. Those who push the boundaries may stumble, but they are also the ones who change the map for everyone else. As the curtain falls on MicroStrategy's journey so far, the company stands as both a symbol and a paradox. It began in 1989 as a modest software startup, survived the dot-com crash, and carved out a niche in business intelligence. But its reinvention as the world's largest corporate holder of Bitcoin redefined what was possible for a public company. Some see a cautionary tale of excess, others see a masterclass in visionary leadership. What cannot be denied is that MicroStrategy forced the world to confront uncomfortable questions about money, value, and corporate responsibility. By tethering itself to Bitcoin, it placed one of the most disruptive technologies of our era at the center of mainstream finance, making history in the process. Whether it ultimately becomes a legend of triumph or a monument to risk, MicroStrategy's boldness will be studied for decades to come. And so we close this chapter with a reminder. The story of MicroStrategy is still being written. Bitcoin continues to rise and fall, and the company's fortunes rise and fall with it. But one thing is certain. Michael Saylor and his firm have already changed the conversation forever. They've proven that conviction can reshape not just a balance sheet, but an entire narrative of financial history. The question is not whether MicroStrategy was right or wrong, it is whether the rest of the world will follow. If you've stayed with us to the end of this journey, drop a comment with the word strategy to let us know you're here, hit the like button, and subscribe to the channel for more deep dives into the untold stories of companies that dared to risk it all. This is just the beginning.